Major funding for these broadcasts is made possible by grants from New York Community Bank, Capital One Bank, Perfect Building Maintenance, Chase Commercial Term Lending, M&T Bank, Genova Burns. Additional support is provided by AKA Hotels, Corman Communities, Aerial Property Advisors, AVR Realty Company, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Citizens Bank, Collins Building Services, Connect One Bank, CPEX Real Estate Services, Cushman & Wakefield, DDG, Dime Savings Bank of Williamsburg, Douglaston Development, Levine Builders, Fisher Brothers, First Nationwide Title Agency, Flushing Bank, Friedman, Handler Real Estate Organization, HAP Investments, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, New York's Window Company, Madison Realty Capital, Matone Group, Mercantile Commerce Bank, Meridian Capital Group, New Banks, Optimum Window Manufacturing Corp., People's United Bank, Rosewood Realty Group, SJP Properties, Sterling National Bank, Stonehenge Partners, TD Bank, TerraCRG, The Continuum Company, The Moynihan Group, and These Friends.
Everybody wants to own real estate in New York. Everybody, people from around the world want to own real estate in New York. So today I've assembled this group of 3 distinguished investment sales professionals to provide their insight on what's happening on owning real estate in New York. My guests are my dear friend, Tim King, who's the founder and the principal at CPEX. My other good friend, who only knows Brooklyn, even though he's been allowed to come to Manhattan today, Ofer Cohen, who is the president and CEO of TerraCRG. And last but not least, our friend, were you allowed to come to the city from Westchester, even though he grew up in Brooklyn? David Schectman, who is the senior managing director at Meridian Investment Sales. So you're only allowed to be in Brooklyn. Once in a while, you must be able to do business over there. Timmy can take every part of the country, and so could you. How is business? Are we at the highest level we've seen in years? I mean, forget Stuytown is definitely going to skew the numbers.
So the answer is yes, we're at the highest level in years, but I think the question is how high is high and where are we at in the cycle?
So? You're throwing the question, so I want to...
Well, you have all the answers.
I don't have the answers. I don't have my...
If I had the answers, I'd be at the track, not here.
Well, I think dollar volume is what we're seeing now really increasing, and Devin and I spoke about it before, is dollar volume actually doubled from last year, like in places like Brooklyn, whereas the number of transactions stayed flat.
And what does that tell you, Ofer? The prices have spiked dramatically.
100%, right.
Dramatically.
So now we're seeing ourselves marketing and selling same deals that we sold 2, 3, 4, 5 years ago for twice and triple amount of money. And we're seeing a lot bigger and bigger kind of capital moving into markets that they wouldn't even see themselves moving into just 3 or 4 years ago.
When would you see institutional capital go to certain parts of Brooklyn or Queens? Okay, when would you see a major REIT think about going into the market?
I feel like a modern day Moses, because for 40 years I wandered in the vast wasteland known as Brooklyn, and all of a sudden it's become the promised land.
Right.
And the manna are bricks.
And there's no neighborhood in Brooklyn that institutional capital is going to say no to at this point.
Wait a second. You're telling me that institutional capital is going to go to New Lots Avenue in East New York or Pitkin Avenue and say, I really want to invest in this market?
If they can find scale, yes.
Now I'm ready to jump in. So business is astonishing. $58 billion worth of volume is the building trades in 2014.
Are you taking the statistical role of becoming the statistician today?
That's the only statistic I'll throw out. But our business has increased. In the 6 months that we've had Meridian investment sales, we have seen business increase dramatically. The fervor remains. There's a tremendous amount of debt. But I think a very key component to this continued business, I think 30% of all transactions that I have seen have been driven by 1031 buyers.
Which is what I brought up before. Who wants to explain to my audience what a 1031 means? Timmy or Ofer?
Kind of like not a draft dodger, but a tax dodger. Someone who's looking to defer paying the capital gains on their investment. And to some extent, it's a little bit of a fool's paradise in the sense that they're selling what was presumably a good asset that they achieved a decent return on. And now in order to avoid paying the capital gains tax on the sale of that asset, they'll put it into a replacement property. But oftentimes, that second or subsequent transaction may not have the same return on equity.
So my comment when people ask me about 1031s, because I'm basically conservative, as you know, I said, you know what you own today. You don't know what you're going into for the future. And true, you're making a substantial amount of money on the sale, but the taxes, today, maybe 5 years ago, you went into a property and, it was a Starbucks. I'll give you the best example, and I think this is a great example. 10 to 15 years ago, everybody loved the Gap lease. It was the tenant of choice. So if you bought a property that had a Gap lease, it was a rated tenant, everything. Gap closed 80% of their stores that they had these 15-year leases. So what happened to the value of that property?
Well, I think that when you talk about 1031, there's three things you have to keep in mind. First of all, every institutional deal or other people's money deal is ultimately not being 1031 after it gets sold because you need to distribute to your investors. That's number one. Number two, even if you do a 1031, we were seeing two kinds of 1031 exchange guys. One is the family that own a building that became a development site. It's they're getting no yield on their equity and they're trading it for $50 million, and now they're getting a stable income secure for the family that they didn't have before. So you would agree with me that kind of makes sense.
Completely.
Where we are seeing, another section of the market is people exchange for the same yield, but for lifestyle choices. So someone that owns a portfolio of rent-stabilized multifamily buildings want to sort of step back from management of the business day to day. Maybe their kids are not interested in.
So as David brought up, which I've always believed, that 25 to 30% of the sales that we're seeing today are due to the tax deferred that Timmy was talking about. Now let's talk about the prices. Now you just said before that you're seeing the building that you sold 3 years ago is now being sold again. So what we're seeing is, are we seeing prices, as I said before, certain prices are people believing that the rents can go to any level? I'm talking...
Yes, Michael. Across the board, I am seeing people, the pricing that all of us are achieving is staggering by any metric, and people are buying appreciation. People are buying appreciation. For the past 6 years, I have not seen anybody model in a 10-year hold for any asset, be it office, retail, residential, rental, or even hotel, any potential flat or negative growth in a 10-year period. We're now 6 years into increased pricing. Sorry, I have another statistic. At one point in 2014, pricing was increasing 2% per quarter for 4 quarters in a row across the board in Manhattan. We are 6 years into a continued rise, and people still believe that prices are going to rise. But the fundamentals tend to prove that they should. We have more jobs in the city. We are creating one of the largest public works projects in U.S. history, if I'm not mistaken, on the west side of Manhattan. We have Atlantic Yards. It's going to be supported.
I am not questioning. My question is, you can only pay rent to a certain level. You know, at one time the idea was you shouldn't spend more than 30% of your income on your rent. Today, millenniums and other people, a variety of people, the entire community, are spending 50 to 60% on rent. Okay, you know, people, it's like the micro units. You know, oh, this is an apartment. I joked that it was one of the owners, you know, I can't use his name. It was a K building. A K building, Mr. K's building is, you know, that former 2-bedroom apartment is now a 4-bedroom apartment. And people don't look at the rent, they look at the room. I'm renting a room in an apartment, okay?
Right.
And I need a storage closet at a storage company because there's nothing else.
Well, I think you need to look at the rental market. For example, in Brooklyn, we've seen up until last year a 10% annual increase for 4 or 5 years. But that was a result of there was not enough inventory coming into the pipeline initially. And there you have this new demographic moving on to all these neighborhoods and demand quality level housing. And so what we're seeing right now, where we have about 30,000 residential apartments being developed in different stages of the development process in Brooklyn, we're starting to see the rental market leveling off. But that's okay, because now there's actually supply to...
Let's leave the bullish part of the residential market. Let's talk about the retail market. You know, how do we see the retail market? I mean, because you've always had many years of specialty in the retail market. How do you see retail sales?
Well, I want to go back to David's point. You know, retail to a very large extent is driven by
people.
Retail rents.
Sure.
Well, so that's, you know, people is a different issue. And, you know, to Ofer's point about the influx of new apartments, I always make the joke that when we moved into our office on Willoughby Street, that the tallest building in Brooklyn was behind us, the Brookliner. Now I walk out the front door, I look across the street, and there's Bridge Street, the Stall project that became taller than the Brookliner. Then directly across the street from that is the Avalon Bay project that's taller than Stall.
Okay, and one day you're going to have the other property that Mr. Stern is building,
and many others. So my point is there will be several thousand new families living in a 3-block radius of my office, but there are no more coffee shops, there are no more laundromats, there are no more liquor stores, there are none of the necessities of life that people need. So that's going to drive retail rents. But, you know, I think David made a good point that there is some point of no return where a retailer simply can't afford to, you know, you can't sell enough whatever. If you're selling crack, you can't sell enough of it to pay the rent that people get to. And what I think is driving retail sales, you know, what's traditionally a cap rate based function, is our interest rates. And, you know, a great example is I'm selling a property that I sold to the current owner 25 years ago. And think about this for a minute. When he bought it, he paid $1,200,000. The triple net rent at that time was $120,000 a year. It was a 10 cap, but that was the prevailing interest rate at that point in time. Today, we're offering it for $4 million at a 5 cap. So the rent's risen from $120,000 to $200,000. But what made the value go from the $1.2 million to $4 million is not the increase in rent, which is the historical model, but rather the decrease in interest rates.
That's a great point, but there's another factor in retail, and let's talk about, I'm geographically challenged as well. I'm talking about the 5 boroughs of New York City. Retail has changed with technology, and a lot of retail stores, let's take Soho for instance, the southernmost part of Mercer Street, Green Street, where I've sold a ton of retail condos. What's happened there is people will continue to pay rising rents, astonishingly high rising rents, and the store will actually lose money. And the companies sometimes are okay with that because that loss leader is advertising.
But you know what, David, that was specifically was always in Madison Avenue. For years, Madison Avenue was not a retail thing. It was an advertising. It was a branding situation. That's why the stores were there. The same thing in Soho. But when you're talking about retail in other markets, okay?
Brooklyn has it as well. You have to be. Brooklyn is one of the hippest places on the planet now. Whoa. And it's it permeates all kinds of pop culture. You have A-list stars naming their kids Brooklyn. You have swimsuit models named Brooklyn. And you have a store...
It's like Wrigley in Chicago.
Never heard of it. You have a store in Brooklyn Heights. You have a store in Dumbo. You have a store in Williamsburg. That is advertising you can't pay for. So the nationals understand that, and they are skewing the market a little bit.
But you know what? Ofer specializes in Brooklyn. You're in the 5 boroughs. Queens has become a hot neighborhood. Let's look at, the investment sales. Look at the office buildings that have been sold recently and what the rents are. Because millenniums, as we did on the show a week before, they want to live. They want to be in Long Island City. That's where they're living. They may want to be in Astoria. Some of them look, Flushing. The Flushing market is strong. I mean, it's a specific market to an Asian population that, that's the type of business. But Flushing, the power is really strong over there. So there are different markets. But I think one of the big things on investment sales is, and I had to recently go to Brooklyn to inspect the building for New York Community Bank, is I went down to Avenue S. And I went by cab, and it was still a 45-minute cab ride. If I would have taken the subway, it would have been an hour and 15 minutes with a walk. That changes the value of a property, okay? I think transit development areas which are transit-oriented do much better, okay? Near a subway, near a bus, it has a situation. Or near, if it has a zip car, or the other situation in the market over there. But how high is high? That's my question today.
I think there's two kinds of retail when you look at the Brooklyn market. You have neighborhood retail, which is very underserved right now, and there's brand new neighborhoods like Bushwick, like Bed-Stuy, like South of the Park that really need the amenities that all the residents that are moving into all these new buildings need the amenities that these neighborhoods don't have to offer. So that's one kind of upside that investors are going to start realizing in the next 5 years as residents moving into this neighborhood. But there's another kind of retail in Brooklyn which is also kind of exciting, which is what's happening with City Point. Just a couple blocks away from City Point, which is the largest retail project in Brooklyn, I don't know if in the city. 2 blocks away from it, we have the best performing Target in the country, on Atlantic Terminal, and they're opening another Target City or Target, so.
But let me tell you, there's a phenomenon happening in retail, and I did this a couple weeks ago. It's called the effect of e-commerce on bricks and mortar retail. People are still going to bricks and mortar retail. In addition to the people coming in, there are services. There's called Instacart and other situation where you can get something from Whole Foods delivered to you. You can get something from Costco on 116th Street delivered. So, they may say you need warehouses for distribution, but people want to touch or see the item. And everybody was saying that Best Buy would go out of business. Circuit City went out. Best Buy isn't going out of business. Their business is increasing because people want to be there. P.C. Richards has been in business over 100 years because they're still in business, even though there's e-commerce. What about the office market in Brooklyn? How are buildings trading?
Brooklyn is a destination. I mean, this is long established already. The office stock in Brooklyn is amazing. I don't think there's enough of it. There's, you've had the state and federal courts right on Cadman Plaza. You've had for years, lawyers have had to trek back to Manhattan or other places.
Let's get off Brooklyn and let's go to a borough that people really aren't talking about. Let's talk about Staten Island, where there's a lot of hoopah and everything of the wheel, of the outlet center. What do you see? I mean, you drive in from over the,
If I were a Staten Islander, I would hate people like myself who clog their highway every day. Look, Staten Island is a unique marketplace. You made the point earlier about if you thought going to Avenue West was painful, then going to Staten Island could be tough too. However, I think when the wheel and the outlet center are finished and the ferry service becomes more established, you're going to see more traffic there than you will in a vehicular sense.
But, Jeff Levine brought up a great comment about ferry service, and he has Williamsburg, the building. He says, ferry service is great, but when it's the winter, it's a little cold on the ferry service.
So the solution for Staten Island, if you believe it needs a solution...
I'm not asking the solution. I'm talking about our properties trading high in Staten Island.
That's and they're trading higher because it's becoming, or it's trying to become, a destination. So the answer is I've seen increased volume there to the extent that we do any work there, and I've seen pricing appreciate, but not in line with the other 4 boroughs.
Wait a second. Now you brought up the other borough, which I know Brooklyn. Now we take the one that has a BR, but it ends with an X. What about the Bronx? I know you've seen.
Look, the Bronx, I think, has an opportunity as long as this cycle continues. What David just touched on is how Staten Island is getting more attention. Everywhere is getting more attention. There are so many dollars chasing so few transactions that people are going further and further afield. And so, look, it's easy to get to the Bronx than it is to Staten Island in many cases. And
no question.
There's a lot of infrastructure
even though
already
the
there.
cab ride to the Bronx with the expansion was more because it took a little longer. But the Bronx, you have a lot of good transportation.
A lot of infrastructure in place.
We just saw a 19-acre trade this past Friday, the former Whitestone Cinema site. This was in the market.
Sure.
I think what people have to recognize and what they're doing more
And
and
what
more.
what was it sold for? Residential? I'm not asking.
It was a this is public record, a $41 million sale from a major national developer to a major New York developer who previously has not done anything in the Bronx.
And what is he going to do?
There is no public comment, but I think it's a brilliant play because
Is it residential or retail?
It's M as in Mary, M zone. So it still looks like commercial at best, potentially retail in the future. But the idea in the Bronx has, and Staten Island, although Bronx is much more recognizable as is Queens, they have one thing that Brooklyn and Manhattan do not, the word acreage. You can get incredible acreage, even in Queens, although good luck now. But Bronx is a place where you can think on a macro level. You think on a macro level in Manhattan, it's got billions in front of it.
Okay. Tim brought up something that I want to know, okay? And it's not, we won't do the biblical study, but there were 7 good years and 7 bad years. We're in a cycle. We're in as people would say, and I brought it up last week, I was with some people, what inning are we in today in the cycle? Okay, are we at the 5th inning or are we at the 7th or 8th inning? Okay, and nobody knows. Okay, the cycle has been increased because, as Tim brought out when he alluded to the situation about this sale that he had 20 years ago and today, interest rates are at a different level. Interest rates are so low. If interest rates go up, and if there's changes, if there are other circumstances, I still remember how wonderful 2007 was, and I also remember 6 months later in 2008 when everybody was crying.
And I still have the scars. So to your point, it's not if interest rates, but when interest rates. And when that happens, there will be a considerable slowdown in many parts of the marketplace. I think there are some areas that are going to be somewhat shielded or insulated. And I may be drinking my own Kool-Aid, but I do think that downtown Brooklyn, for example, there is so much velocity, so much momentum that's going to roll on maybe slower.
I agree. Different markets are going to have
different. But the fringe, back to my earlier comment about people going further afield to find something, the guy who went the furthest afield might find himself waiting for the next cycle.
I think when you look in the Brooklyn market, what I always say is that we're in the middle of a 25-year tear. I believe that market really started, 2003, 2004. And the demographic shift and the transformation that the Brooklyn market has been experiencing, these are things that are not going anywhere. 4 years ago...
So you're saying we can have another good 6 to 7 years based on the location.
Right. No, what I'm saying is that I think that
but it's
markets,
location-oriented as opposed to the world changing.
Yes and no, Michael. I dislike the baseball analogy because, as we all know, there's 9 innings in a baseball game. So some people would say we're at the 8th or 9th inning if you look historically at those historical cycles.
I'm not looking at historical. I'm asking 3 people who are in this business, where do they see? Is it... If I had a crystal ball, it would be wonderful. I don't know how many years. But people are saying, these prices could not be achieved. 3 years ago, people would say, oh, come on. We sold that building for $700, a foot, okay? Today, they're getting $1,000 a foot. Midtown office buildings, Midtown B office buildings are trading at $1,100 a foot. That was an A price. Property is selling at a different number, okay? There's a question of how high can they go. That's what I'm asking.
So the very pointed answer, and I'm still going to drag you back to baseball, we have all been through baseball games that go 10, 11, 12, 13, 14 innings. The answer is the demand remains. the sentiment. So as real estate brokers, we sometimes have 20, 30 phone calls in a day, sometimes more, sometimes less. The global sentiment, when all three people here, all four, especially you, Michael, you speak to people who are looking into New York City, and the sentiment is driving it, and I believe the fundamentals can still weather a 25 to 50, maybe a 75 basis point correction in interest rates. The interest rates are going to go up in the first or second quarter of next year. Yellen is going to have to act, and I don't think you're going to see New York hiccup.
And I think that if, just to bring one more statistic, if you look at 2009, which was the bottom of the last recession, we had a recessionary period in housing in New York City for 4 quarters, compared with the national, that was 6 years. And so I really think you have to put it in perspective. So I do feel like the New York City market is very insulated. I believe, like David was saying, that there's a lot of liquidity and a lot of hunger for product. And I don't think that people are buying real estate in New York City at this point of the market for cash flow. I think
they just want to own property.
I think people are buying.
Right.
People are buying very, very long term. The families that are continuing to invest and doubling up in this market are thinking very, very long term, and it's not about cash flow.
Timmy lives in New Jersey. You live in Connecticut, Westchester.
Westchester.
Right. Those markets, how do you see that quickly? How's the Westchester market? Are you investment sales-wise?
Volume there typically never varies tremendously.
It's still low, is what you're
It's
saying.
still low. It remains low.
Timmy?
Gold Coast stuff in Jersey is hot. The rest of the state is trudging along at historical, very modest levels.
If I'm an investor who's watching my show, and I have people watching from all over the world on my apps, what's the best asset class to buy today in New York?
I'm strong on retail.
Retail office.
Retail office.
Multifamily with retail.
So you like mixed use.
We love mixed use.
So in summation, we won't say we're in the 5th inning because we don't want to play, as Mr. Schectman said, we can go into 14 innings, 0-0 or so on. But positively, as we look into 2016, it looks good. The world is over there. And, people want to put money into New York. It's a better investment. It's easier than the stock market, and it's easier than earning 0.000 or 0.001 at the bank. So I'd like to thank Tim King, Ofer Cohen, and David Schectman, and I'll see you next week.